The average reading this year has been minus negative 11.7. So investors have been bearish all year. Okay, it's similar to sentiment in 2022. But here's why it matters. We're down double digits on average for sentiment. The last 3 times we had negative sentiment was 1990, 2008, and 2022. Those were all bear market years. Investors are acting like we're in a bear market, yet the market's up 13% year to date. So I would call that the most hated V-shaped rally.
We're entering the heart of Q3 earnings season, and Tom Lee's latest analysis paints a picture of remarkable resilience in both corporate profits and consumer balance sheets. So far, 84% of companies have beaten expectations by an average of 6.2%, signaling that despite macro uncertainty, rising yields, sticky inflation, and political dysfunction, corporate America continues to power forward. Major financials like JP Morgan, Goldman Sachs, and Bank of America delivered strong results, highlighting robust consumer and small business activity and stable credit quality. The S&P 500 is on pace for nearly 9.3% earnings growth, with small caps leading at 43%, a signal of cyclical strength beneath the surface. Yet Lee warns investors to stay vigilant. High-yield spreads are widening slightly, and the looming government shutdown could inject short-term volatility. Still, compared with previous tariff-driven periods, market stress remains contained. In short, fundamentals are far healthier than sentiment suggests.
Subscribe to Daily Bitcoin Trends for expert insights, real-time market updates, and proven crypto strategies. No hype, just smart analysis to help you make better decisions in crypto.
With regard to macro, I want to talk about third quarter earnings season, among other things. We are entering the heart of earnings season. And so far, 84% of companies are beating by 6.2%. So it's a good earnings season so far. Last week, it was really the banks that mattered the most. Wells Fargo, JP Morgan, Goldman, Citi, Bank of America, and Morgan Stanley. And they all beat solidly. 2 of these happen to be granny shots, JP Morgan and Goldman Sachs. JP Morgan said the consumer and small business remain resilient based on our data, while we're closely watching the potentially softening labor market. Our credit metrics including early stage delinquencies. Our credit metrics, including early stage delinquencies, remain stable and slightly better than expected. That's a good sign. Overall, companies are expected to grow earnings 9.3% in the S&P and 43% in the small cap space. So small cap earnings growth is strong. That's a good sign to me. But it's really this week from October 20th, which is this week, through November 3rd is the heart of earnings season. You can see how many companies report each of those 3 weeks. Now, not everything's been great on earnings. I'd say that private credit has been what people have raised their eyebrows about. Tricolor Auto and First Brands Group. Well, First Brands looks like an outright fraud situation. But if you're worried about credit, just keep an eye on high yield, which has actually been spreads widened, but it's hardly alarming. It's lower than it was in April of this past year during the tariff heights. And if you look over the last 10 years, you can see 347 basis points wide is a pretty mild reaction in high yield. So it's not alarming. For the week coming ahead, there is a lot of macro, but I'd say the market's going to focus on Friday's September core CPI. Now that's going to happen even with the government shutdown. So they made an exception here to report that number. And then there's some important granny earnings this coming week: GE, Netflix, Lam Research, Tesla, and GE Vernova. And this is mapped out here. So far, only 4 of the granny shots have reported, but it's been good numbers so far. And let's talk about the government shutdown. We're in the 16th day. In 2018, it was 35 days, so it's been 7 years since we've had a shutdown, but I'm sure this is going to potentially run longer. Polymarket flipped on October 9th and now expects a very extended shutdown. In fact, 81% odds this will be more than 30 days, which means it'll go past November 1. And I want to talk about sentiment too, because the latest AAII reading came out at minus 12.4. So there's more bears than bulls. But here's the thing. The average reading this year has been minus negative 11.7. So investors have been bearish all year. Okay, It's similar to sentiment in 2022. But here's why it matters. We're down double digits on average for sentiment. The last 3 times we had negative sentiment was 1990, 2008, and 2022. Those were all bear market years. Investors are acting like we're in a bear market, yet the market's up 13% year to date. So I would call that the most hated V-shaped rally. And then as far as stock performance within the Granny portfolio, the top 5 performers this past week were KLA, Kencor, American Express, AMD, Lam Research, and Broadcom. Most of these are AI semi names. And Amex had good earnings. The bottom 5 were S&P Global, Axon, MicroStrategy, Robinhood, and Arista Networks. And as far as themes go, the number 1 performing theme has been global labor suppliers, followed by easing financial conditions, and style tilt.
One of the things that we've been talking about for, the last month or so is this final rotation, right? And we said many times that we would likely find a low for Bitcoin dominance in the month of September, right? And you can see, once again, a low was formed the week of September 8th. Now, ever since then, I've had a lot of people reach out and they're like, well, when's it going to start? And I'm like, guys, Bitcoin dominance has been green. This is now the 6th week in a row. It is happening. It's just not happening as quickly as some people want it to. Now, here's the thing, and I will say this, and I actually said this a few weeks ago as well. When 60% is breached, it should skyrocket higher. Now, that actually happened a couple of weeks ago, right? We saw 60% get breached and it soared higher, right? It went way higher than a lot of people thought it was going to. And, a lot of the people that were convinced that we would not see 60% watch that wick happen. And then they think it's just a wick. I don't. I think Bitcoin dominance is showing you where it wants to go. And then this is the process of people slowly getting the memo. Okay? So it's happening, right? It's in the process of happening. It's just people aren't necessarily accepting that it's happening. But the next time we breach 60%, I think we're going to see dominance move up quickly, just like it did. I think on this wick, people weren't really, they weren't ready, right? They weren't ready to accept that this might just be another higher low. And look, guys, I'm not here to say that, that it has to go to a new high, but you have to be open-minded to it. I mean, it ultimately comes down to how low the ETH Bitcoin valuation goes. And I said that back in June and July, and the idea is that alt Bitcoin pairs went lower. They put in lower lows, but because ETH Bitcoin is potentially putting in a higher low, it made it so that Bitcoin dominance was not, at least yet, able to put in a higher high. So whether dominance is able to put in a higher high or not, which is a distinct possibility that it could, is ultimately going to depend on how low ETH goes against Bitcoin, but it still will likely be a higher low for this cycle. So we have to remember that. And by the way, a lot of times when Bitcoin dominance does find tops, it'll then wick above them later on, right? Even in 2019, you sort of had a top and then a wick above it, and then it went through, right? And then this one, you had a top and then you wicked above it and then it went down. So you have to be open-minded to the idea that dominance could run back up near the highs. You might not like it, right? And you might take your anger out on me, but remember, I don't make the rules to this stuff, right? I just enforce them. And if it looks like dominance is going to go higher, I'm going to call it out. And that's what it looks like to me.
Looking ahead, Lee points out that macro catalysts, like September's core CPI release and upcoming earnings from giants such as Tesla, Netflix, and GE, will dominate market psychology. Investor sentiment, however, tells a fascinating story. The AAI reading sits at 12.4, indicating persistent bearishness even as the S&P has gained 13% year-to-date. Historically, such pessimism aligns with late-stage bear markets, not bull markets in motion. Lee calls this the most hated V-shaped rally, where negative sentiment coexists with strong performance, a dynamic that often fuels further upside. Within his Granny Shots portfolio, high-quality names like AMD, Lam Research, and Broadcom continue to lead, reflecting structural themes of AI acceleration and easing financial conditions. For crypto investors, these equity signals matter. The rotation of capital toward high-conviction assets is beginning to echo in Bitcoin markets, where dominance trends are becoming impossible to ignore.
I need to say a couple of things as well. And, it's just sort of me experiencing this for like the 30,000th time. And I'm tired, frankly, I'm tired of it. And it goes something like this, all right? And tell me in the comments if you've heard this one before, right? Because I'm sure many of you have, and it gets old after a while. Basically what it is this. I will say Bitcoin dominance is going to go higher. A lot of influencers will then come and say I'm wrong, right? And they'll be like, no, he's wrong. He's a toxic Bitcoin maxi. There's no way. He's not opening his mind to what's possible. All this stuff, right? And they don't want to hear it. But then when you get these wicks up and you see dominance shoot higher and you watch alt Bitcoin pairs go lower, just like they've done all cycle, right? Anytime you see that happen, it's like, I can't call them out on it. Because when I do, they get so emotional, right? Guys, if you can't handle the emotions of the cryptoverse, then get out of the kitchen, right? Get out of the kitchen. If you are going to run a YouTube channel where you spend years promoting and shilling microcaps, altcoins, essentially penny stocks, if you're going to spend years doing that and telling people why dominance is not going to go up, but then you're going to cry out like you're the victim when it turns out you're wrong, that's not a good thing to do either. And I wanted to go on this little tirade a couple of weeks ago, but I felt like it wasn't the right time. But maybe now people can at least see where I'm coming from, right? Because it goes exactly like that, where I will tell people for years that alts are going to bleed against Bitcoin for years, and people don't believe it. And anytime they put in a lower low, I'll point it out and I'll be like, look guys, this is the proof that what I've been saying is correct, right? This is the proof. But then all I hear from these guys is, you're not being sensitive. You're not being, this is, guys, again, if you are going to shill these things for years, these microcaps, these penny stock equivalents, you're going to shill it, don't play the victim when it doesn't work out, right? And don't get mad at the people that got it right just because you lost some money. It's not fair. If they're going to, and this is what they do, if they're going to tell people to have fun staying poor when their altcoins are going up, they have no right to play the victim when they're dropping. And I've seen it happen so many times. And at some point, I feel like the industry, the market participants have to say, you know what? Enough's enough. And let's focus how we can build the cryptoverse in a positive way. And that does not include just feeling bad for the guys that keep getting wrecked on altcoins every few months, right? The market's trying to teach them a lesson, and they're just not willing to accept it, okay? So I'm going to keep doing my thing, and I'm sure they're going to keep doing their thing. But I honestly resent the whole thing of this is me saying this is what's going to happen. They're all like, no, he's wrong. And then when it happens, they just get emotional about it. Again, if you can't handle the emotions, if you can't handle the market, if you cannot handle the cryptoverse, then get out of the kitchen, right? That's the way it works. So at this point, alt Bitcoin pairs did go to a new low. They went to 0.29. And I'll be the first to say, right, like I would guess there's going to be some type of bounce by alt Bitcoin pairs sometime in November. But in the short term, for the rest of October, I think you have to have your Bitcoin maxi hat on. Because dominance should go higher. And again, timing is important with this stuff. And you know, a lot of people don't think it is. Look, if you're going to go buy low expense ratio index funds in the S&P, timing's not important, right? In that case, time in the market beats timing the market, because there's not a single soul on this planet that can consistently time the market. Not you, not me, and none of the gurus on Twitter. No one can. But if you're investing in altcoins, if you're investing in the equivalent of penny stocks, timing is everything, right? Because you can't, you can't just sit here for years and say that like altcoins are going to outperform Bitcoin, and that's why you justify buying alts over Bitcoin just to watch them bleed time and time again, right? That makes no sense, because again, at this point, a lot of people require an alt season just to get to break even on their Satoshi valuation, right? Just to get to break even. And that was a mistake I made in a prior cycle. It's not like I'm better than the guys that are going through it now. The only difference between me and them is I went through that process in a prior cycle, and they're now going through it in this cycle. My hope was to make it so that some people did not have to experience the same pain that I felt in the altcoin market in prior cycles, and to help them focus on what truly matters, and that's Bitcoin. Bitcoin is the reason that we're here. If Bitcoin goes to zero, altcoins are going to zero. But Bitcoin could survive and eventually go to $1 million, right, in maybe a decade or two. But that doesn't mean the altcoin market will. And it doesn't mean that everyone else's altcoin will, although I'm sure yours will be just fine. So you have to remember that at the end of the day, the common ground that we can all find is Bitcoin. There's an infinite number of altcoins, and there will continue to be an infinite number of altcoins minted every single day, right? We cannot keep up with them. It's just going to infinity. There's only one Bitcoin. And that is why liquidity has and will continue to flow to the king.
As the earnings narrative strengthens, Bitcoin is quietly asserting itself as the ultimate liquidity magnet. Bitcoin dominance breached 60% and continues to trend higher, a technical signal that risk appetite is consolidating around the most resilient asset in the crypto universe. The message is clear: altcoins are bleeding, and liquidity is choosing strength over speculation. Investors clinging to micro-cap narratives may face further pain as Bitcoin reclaims its role as the benchmark for digital value. This is not the euphoria of 2021. It's the disciplined phase of capital rotation, driven by fundamentals and market maturity. For experienced investors, the alignment between robust corporate earnings, improving financial stability, and rising Bitcoin dominance is no coincidence. It signals that capital is moving toward quality, and in this cycle, quality means Bitcoin. The market's message is unmistakable: liquidity respects conviction.